Okay, so right now we see conditions globally that have deteriorated, but some parts have really shined a light and others look like we need some serious work to be done. And I'm going to bring that to you today, where we are at. Is it a 2008 scenario? Is it a 1929 into the 1930s scenario? Is it a bit of both or nothing of the sort? Let's break it down. On today's video, the first thing I want to cover is a strong US dollar crisis. Yes, that's right. The strong US dollar does, in fact, create a crisis. The second thing is the commodity troubles that are taking place today, still supply chain issues and other factors. The third thing is inflation taking a toll. So many people today are really struggling, and what is going to come is going to be even more painful, but we need to discuss what we can do as individuals about that, all of that and more. First thing I wanted to show you is an update on the situation with Credit Suisse. So this company here has gotten themselves into a major battle. By the way, there's so many different things happening from all different angles. And if you look at what's happening right here in this particular instance, it looks like the company has been failing for a little while, and now it has finally caught up with them. Credit Suisse prepares to sell parts of Swiss domestic bank. So this is one aspect of it. Another is this. I brought this up in a previous video and wanted to show you a little bit of an update. We're talking about central bank liquidity swap operations. This is from the Federal Reserve's website directly. When you come to this channel, you're going to get information directly from the source, and this is it. So we're looking at these liquidity swap operations that take place, and usually there's not much going on. However, just recently we have seen, if you look at the very bottom of the page, Swiss National Bank, and before, I believe it was last week, this number, it has doubled, 6.2 billion. And that is double what we saw. And of course, that shows you that there is an increased need for capital right here. Perhaps there's funding issues that are taking place going on behind the scenes at some bank in Switzerland. Could it be Credit Suisse? I really don't know, but we're gonna find out. I could tell you though, Goldman Sachs, according to them, their report suggests that Credit Suisse, they are assessing strategic options and they're remaining a sell. That was as of the 11th of October. So they're saying you don't want to hold on to this company and you want to sell the shares that you have. They've got some problems coming on. JP Morgan warning of mighty dollar that may trigger a crisis. Wow, what is he discussing here? Well, there's a lot in it, but I wanted to show you the main points. Rising greenback could spark upheaval in derivatives market. Cash position is near the highest in 10 years. So you have seen the US dollar absolutely surging, and this has been positive for anybody holding on to dollars and having to spend their money in another place. That's fantastic. But for those outside of this situation, probably not feeling the good side of it, okay? However, there's another problem, and he discusses that here. In the third paragraph, he breaks down what could happen in a dollar crisis. Here's how it could happen. Foreigners have snapped up dollar-denominated assets for higher yields, safety, and a brighter earnings outlook than most markets. A big chunk of those purchases are hedged back into local currencies such as the euro and the yen through the derivatives market, and it involves shorting the dollar. When the contracts roll, investors have to pay up if the dollar moves higher. That means they may have to sell assets elsewhere to cover the loss. We don't know what's going to happen, but I could tell you right now that having a currency like the US dollar strengthening too much starts to create imbalances in the financial system. We don't know. This is, of course, all speculation, but I wanted to bring it to you here so we could take a look. Then we have this, directly connected, but it brings me into the next issue. Soaring dollar leaves food piled up in ports as world hunger grows. Importers from Ghana to Pakistan have struggled to pay for cargoes, risking shortages and adding to global food inflation. This is a very serious issue for obvious reasons. When you have this, you generally have civil unrest and you have problems that cannot be resolved by quantitative easing. Okay, so Further into the article, it says in Ghana, where the cedi, I believe that's how it's pronounced, has lost about 44% this year against the dollar, making it the second worst performing currency in the world. There are already worries about supplies ahead of Christmas. This is the quote. We think there's going to be a shortage of some food items. The dollar is swallowing our cedi, and we are in a hopeless situation. So you could see the comparison of the US dollar to Ghana, Pakistan, Sri Lanka, Egypt, and Bangladesh. All of their currencies, of course, taking a hit to some degree, either 20% or what looks like approximately 50%. So that just shows you how much of an impact a strong dollar has. And you got to think about it like this. Okay, you're in the US, don't worry, I'm okay, everything's going to be fine. But if countries can't buy your stuff that you're trying to export, it affects you. So it does have an impact at home as well. It might take a little while to come around, but it's certainly there. If the domestic consumption is all fueled by debt and credit cards, then you got to be very careful. Okay, then brings me to this. The Mississippi River is the main artery for U.S. crop exports, with covered barges full of grain floating to terminals along the Gulf of Mexico. Petroleum and imported steel also transit through sections of the waterway as this fertilizer traveling from New Orleans. The dryness and the low water levels it brings imperils such commerce. And that's what's happening today. It's getting super low, and you are actually seeing the restrictions coming through this method of transport. That's going to put the prices higher. That's going to impact businesses and, of course, jobs as a result. This is talking about the international world order and the way things have changed, specifically with China. It is the only competitor with the intent to reshape the international order and the growing capacity to do it. You're seeing what China is doing. They're partnering with Africa, they're partnering with Saudi Arabia, and they are trying to, as they say, change the international order. This will have a great impact when you look at the US dollar, as we just talked about a few minutes ago, but also where we are buying and selling, where we are doing our activities within the economy. I think this is going to have a huge impact. Also saying, quote, the world's major autocracies believe that the democratic world is in decline. They seek to advance a very different vision where might makes right, and technological and economic coercion squeezes anyone who steps out of line, saying that this has really changed. And of course, the world has left the post-Cold War era, often associated with the rise of globalization, international cooperation, and the general lack of military conflict between great powers. So we will see what happens in the coming weeks, months, and of course years. Now this is an interesting one, because you can see what's happening with Turkey and Russia, and in this case here, the Turkish president is dealing with the Russian president, basically saying, let's make this happen. Possibly that they would bring gas into Turkey to move it to Europe. So using Turkey as an intermediary, is this going to fly? Well, certainly that could be the case. You could see floating the idea of exporting more gas through the Turkish Stream gas pipeline running beneath the Black Sea. I think it's interesting because of what you've seen recently. When you look at the Nord Stream 1 pipeline, that's offline. Nord Stream 2 never even got put online in the first place. Where is the gas going to come from? Is Europe going to say, well, it's kind of coming through Turkey, so maybe that's okay? I don't know. But this is a really serious situation, because without that gas, I think it's going to be a very cold winter in Europe. A lot of countries really rely on that gas from Russia. And then we move into the financial aspects. Looking at all of this is so important. Okay, I'm going to connect the dots here. Central banks will be reluctant to throw in the towel on rate hikes before they are confident that inflation will slow substantially. You've heard that from just about every single central bank. We expect the Bank of Canada to pause its rate hiking cycle in late 2022, followed by the Fed in early 2023. But that's contingent on inflation pressures easing. Does anybody believe that they're going to stop around this time? I'm not so sure that they're going to be so anxious to stop here in 2022, although some do agree with that. it depends on inflation. For the Federal Reserve, they got a hotter than expected inflation number. The job situation looks fantastic according to them. So what are they worried about exactly? Mortgage trigger rate risks heighten if rates stay higher for longer. And this is where I'm going to leave it today, because I wanted to tell you right now that for a lot of people with variable mortgage interest rates, this could create a cascade. This could, in fact, become a big problem for the entire financial system, especially when you look at areas like Canada, Australia, others that are using a lot of variable mortgage rates. It gets to a trigger rate. And basically what happens is you agree with a variable mortgage. In many cases, you would agree, okay, I'm going to pay $1,000 per month. But as rates are rising, you start to pay more interest as opposed to the principal. So suddenly you get to a point in which you're paying just all interest. And that's going to be an issue, okay? Because they're going to come to you and they're going to say, look, you either got to pay a lump sum, we're going to increase your amortization, or other things, okay? They're going to come up with some reason that you got to now get to this point when you get to the trigger point. And I think that this could, in fact, happen if the Bank of Canada, the Reserve Bank of Australia, and other places are going to do this and continue to increase. It's going to impact a lot of people. Okay, we don't know what's going to happen. We're just speculating at this point, but I think it is very serious to pay attention to. Let's break it down right now. And so the question of the day, 2008 or the 1930s, many people have asked this. A financial crisis is brewing as we see years of easy monetary policy unwinding faster than investors can cope with. And we've seen the begging and pleading, please stop increasing interest rates, we can't handle it. Money has been fleeing risk. So all the riskiest type of assets, you've seen the money getting out of there. You see surges here and there in those kind of oddball type of investments that people are putting their money into, but over time it's kind of going down and down and down. It's entering into safer assets. So a lot of investors believe that bonds, sovereign bonds, are safe. So that's where a lot of money has been going into. US dollar strength presents a very real world problem for other countries. That's real key. But of course, in the US as well. New partnerships may form if this persists for too long. The example I use all the time is if China has to pay US dollar for soybeans, maybe they're just going to say, you know what? I'm not going to do that. I'm going to go to Brazil. We're part of the BRICS nations. We're all friends. I'm going to renew with you instead of renewing that contract with the United States. So you see, strong dollar helps maybe initially for a period of time, but over a longer period of time, if it's too strong, then you encounter some serious issues. Okay, if US dollars can buy assets in other countries for discounted prices. So for some people, I noticed a lot of people are moving, they're going to Portugal, for instance. Well, they're using a US dollar, and imagine if Portuguese assets have declined in price, and now you're buying with US dollar, which has increased, it's going to be something to really look at and to think, is that the time to buy that asset, which is now discounted when I measure it in the currency I'm using to buy in that currency, you see? So look at that if you're in the United States. Now, if you're on the opposite end of the spectrum, for those outside the US, see if it's possible to earn US dollar, perhaps online, so that you can spend that locally or you can invest it. So there are options either way. Okay, because a lot of people, they think, well, I'm not inside the US, I can't earn that currency. There are ways to do it. You can do so online. You can teach online any subject. I've talked about this before, done videos about it before. There are ways to do this. And don't think that you're in a destitute situation. You can't actually make change. Learn to go into the online world where your customers are now in a global environment, and that's really important, okay? Because the world's changing, we know that, and we have to be mobile. We have to be able to pick up and go. That's a real key to understand, especially now at this time. If you found this video informative, you're going to really like tomorrow's video, okay? There's a subscribe button down below. Hit that. I'll see you then.